and welcome to this special edition of Political Capital. I'm in conversation with one of the best-known bankers in India and the longest-serving chief of a bank in the country, the Mercurial, Aditya Puri, Managing Director of HDFC Bank. Thank you very much, Mr. Puri. It's always a pleasure talking to you. At the outset, let me just say this, that we all know what a formidable banker you are, but of late, we are also discovering that you're a formidable writer. You've been writing very passionately about India. So let me start by talking more about the state of the nation with you. What, according to you, have been the changes that you've seen in these last 100 days? When we spoke last, the sentiment was turning. We've seen a lot of sentiment change that has happened. Is that actually translating into action, according to you?
I think so. If you look at it, what has happened is, on a broader perspective, is definitely we've seen the bottom. The GDP is now coming closer to 5. We've seen improvement in car sales, in motorcycle sales, in the IIP. We've seen improvement in inflation. We've also clearly seen the effort that has been put in to make the administration more functional in terms of interministerial coordination as well as clear delineation of responsibilities and a clear announcement of the path that they will take over a period of time. So I think both the stock market and the overseas investors as well as the people on the ground are quite optimistic, and things are moving along based on discussions we've been having with people. They're well advanced, but they want to bring them out when they're well and properly cooked. So I think, yes, it's good.
You would obviously be talking to a large range of corporates as well, Mr. Puri. Is the sentiment translating into corporates coming to you and talking now in terms of actually getting on with capex, cycle expansion, etc.? Because that doesn't seem to be getting reflected anywhere, so to speak.
Yeah, you see, what happens is there's a process. By the time so you had the sentiment change, you're having decisions being taken, you're finding the corporate sector far more positive, and you're seeing them discussing as they watch the demand pick up as to their future and what expansions they need. And these discussions are not only with corporates here, they're with corporates overseas as well. So if you take the Japanese, they're excited. If you take the local guys, they're excited. But for that to translate into green shoots and thereafter affect the GDP, I think will take 12 months.
12 months is what is your outlook for things to turn around, is it?
No, 12 months for new projects to be visible on the ground so that they're starting to affect GDP. You know, discussion doesn't help. So you discuss, then you conceive a project, then you close it, then your financial closure, then you spend. And that's the first time it starts affecting the macros. So I'm talking about 12 months by the time things begin to affect the macros. But is there a turnaround in sentiment and people starting to look more positively at expansion? Yes. So all I was saying, Ajit, is that this is not something that you can put your foot that somebody has come and asked you for a loan. That's too early. But when you're discussing with them, you're seeing that they're making preparations for better demand.
What about on the consumer side, Mr. Puri? Are things looking up there as well? What are the trends you're picking up? You're by far one of the most deepest entrenched banks. You've been talking about that to me over the last couple of years. What are the facts and figures and the data points that you're picking up from the consumer side?
Consumer demand has picked up. Consumer credit has picked up. People are far more confident, and consumer demand is largely a function of confidence. So it's starting to pick up partly because you're obviously, if you have more car sales, you have more two-wheeler sales, and you have improvement in consumer durables, obviously then there will be pickup in consumer credit demand. So that, yes, we're seeing the pickup in demand. We've also seen a pickup in working capital demand, but we haven't seen an actual demand off-takers yet on the investment.
You're saying that the GDP growth is likely to pick up. I remember when we spoke last year, almost a year ago, Mr. Puri, you were hopeful that we'll get back to those 7.5% GDP growth numbers in about 12 to 18 months. That's what you told me back then. Clearly, things haven't been very good for the economy. So are you now looking at, what's the kind of forecast or number that you're working with?
I'll tell you how it'll go. It'll probably be this year, we'll be around the 5.5 GDP. Then what will happen is if you get the delta on investment and you get GST and you get the effects, you will probably add somewhere between 0.5 and 0.75. Then if we've taken the right decisions on foreign investment, on business making it easier, on infrastructure, then it'll take at least 18 months before you're talking about the 7.5 figures. So all I'm trying to say is that this is gradual. Let's not expect magic. Let's not try and force magic down. It ain't going to happen. But the fact that it is moving in the right direction is there. The fact that it will be progress in steps is also there. So 7.5 will come, but not tomorrow.
You wrote a very interesting piece recently, Mr. Puri. You called it India Be the Outlier, where you talked about India's place.
Yeah.
And you discussed a lot about where the globe was headed, where the rest of the world was headed. You made a very important point in that article. You said money in the foreseeable future is likely to move to developed economies. Tell me a bit more about what you were really trying to say in that piece, just to share it with our viewers who wouldn't have read it perhaps.
No, there were two parts to it. I said one is that largely money would move to developed economies because there would be a turnaround in the developed economies, and as money turned around, as the economy turned around in the developed economies, you would see the excess money that had come into emerging markets probably go back because the prospects for those at that time were seeming brighter. But I also said in the article, at the same time, while in general they may move out of emerging markets, given that you could get a higher yield and a higher return, India and maybe Indonesia and one or two other countries were outliers in that they had they didn't have structural problems. They had issues which were being defined largely, the fiscal and the current account deficit and the issues on subsidies, which if were resolved, they would also get their fair share. But the world is never static, so what has happened is about 70% of it has worked out. If you see, the US is well on the way to recovery, the Europe is not on decline, and Japan is stable, maybe coming up. So some amount of money did move there, but at the same time, the people that do well in emerging markets, there will be enough money for them as well.
What is your outlook for the currency?
The dollar should strengthen. That was based on if there were flows that went back and risk capital went back, then by definition dollar should strengthen. So the dollar actually has been strengthening. It hasn't strengthened so much vis-a-vis the rupee because the rupee also has been doing well. So I would say if you're looking specifically at dollar rupee, it would be around in this 58 to 62 level. And I would think it's very good if the dollar remains at 60 plus because that's very good for exports. And in developing economies, that's good. And so at the same time, we can build up our reserves at that price. And when the rupee strengthens, hopefully we'll be sitting on a positive mark to market.
What, according to you, Mr. Puri, is the big economic challenge that India is faced with right now? Inflation, managing the deficit, because this is a continuing debate which has been going on, and what should the RBI be doing? What is your own assessment in terms of the big challenges, and how do you suggest, or what do you suggest that the government or the regulator could do to, counter these challenges?
Well, I think they're doing almost all of it. If you listen to what the Prime Minister is saying and what Mr. Jaitley is saying and what Dr. Raghuram Rajan is saying, fundamentally there's an issue on the fiscal deficit. The fiscal deficit is expected to be controlled by increasing revenue on one side, where tremendous efforts are being made on the GST, reducing subsidy on the other side by not so much by depriving the underprivileged, but by making sure that the subsidies that were not reaching the individuals are not wasted, And then God's been kind, Brent is down, and if it comes below 100, in any case, fiscal deficit will come down. We needed a bit of good luck at this point of time. So I think the efforts are being made there. We better get the end results because that's what the world counts. On the current account deficit, if you see, the dollar rupee is in a good position, and so is our current account deficit. And we think exports will continue to grow, as well as there will be stability there. The other areas have also been defined clearly in terms of, if you look at the financial services, in terms of a debt market and reform of the banking system to meet the needs of a growing economy. That will, every day we are seeing new regulation come. What is needed is understood, but it won't happen with a big bang. So that is on the market side. We need agriculture reform, and I think they've started by examining the relevance of the agriculture produce marketing committees as well as the minimum support price as well as the supply chain, and I think they're working on it. And last is the investment. We need definitely to bring into action and make it easier to do business in India. We really need to attract foreign investment, and I think, frankly, I am against all these limits on foreign investment coming in. For Christ's sake, this is capital coming into India which will function under our laws. And I heard the weightage in the MSCI index of Korea is 2.5 times India, whereas our GDP is larger than Korea. And so the only explanation can be that they don't have these multiple limits on foreign investment, which are really quite confusing. So I think we'll have to get the investment in. And let me come to the last one, which is inflation. I think the Reserve Bank has done a lot. Inflation, CPI is below 8%, WPI is below 6%. Yes, we have a little maverick in food inflation, which I don't understand why, but around this time every year this seems to play truant. And I think we should be able to bring that under control. That coupled with the reduction in subsidy and through the oil price should bring inflation under control, and the fiscal deficit may be very close to the 4.1, if not below that. So I think our prospects are bright.
I want to just touch on that point you made about the capital inflows, because you've been grappling with this issue as well, isn't it, pertaining to your own bank on the FII limit. Are you disappointed that on the one hand here is a government which is trying to change the past and say that we are open for business, come in and invest, and on the other hand you've had to do so much of this to and fro and it's still going on?
Whatever I say will get me into trouble, so let me put this positively. I'm not disappointed. I'm extremely hopeful, and I think they understand and we'll get it right.
Okay. Let me come back to the interest rate bit then, Mr. Puri. What is your own feeling, your own view in terms of the trajectory of the rates? Do you foresee rate cuts in the near future?
Firstly, let me split this into two. I really don't think a rate cut at this point of time is necessary for the objectives that the country is trying to achieve. If there was a policy rate cut at this point of time, I don't think it's going to bring investment flooding back because you've got a 1.25% cut. Further, if you really look at it, even though policy rates have not been changed, the interest rates in the market at this point of time have been going down. So I think we do probably need a lower interest rate regime. But we don't really need that interest rate to be down till our projects, etc., come to fruition, which is about 1 year. My own view, I would say somewhere between 6 and 12 months, depending upon how food and oil behaves.
What about the entire NPA issue? Is the worst over there, according to you, Mr. Puri?
I am not necessarily an expert on that area. So people have been saying it's over, but the facts don't seem to work that way. So I would say we are pretty close to the worst being over.
You've been recently, in fact very recently, you've been named India's most valuable brand by a leading global agency, Mr. Puri. I know that you don't like being referred to as a 31%, quarter after quarter, and we had this conversation last year. But of late, there seems to be the 30% plus growth in profits that you were delivering. They seem to have now come into the 20% odd range. What, according to you, has gone wrong? Is it more the economic effect of the larger economy? or is it something else? Can you explain that to our viewers?
Yeah, no problem. First, let me thank you for the fact that we did emerge as the most valuable brand in the country, and all of us are thrilled with that. Now, coming to this 30% odd growth rate, we have always maintained that our growth rate is equal to GDP into real GDP into 3.2, which is the rate at which the system will grow, and we will grow 4 to 6% more than that. Now, I know we work very hard in this bank. I know God supports those people who work very hard. But if GDP comes down from 8 to 4.7 and you expect us to maintain the same growth rate, maybe we have to do a little more of prayers. But really, all that has changed is that the GDP has slowed down. The momentum of the bank has not been effective. More importantly, we've still been growing at a very healthy rate, and we don't want to push. We could even grow faster than this, but we don't want to push the envelope. Because if you look at where we stand today, our brand is intact, our margins are intact, we have no stress in our portfolio, and we have expanded into semi-urban and rural India, where 60% of India lives, and we have a very profitable model running there. We've also virtualized the bank, which is working on whatever you can do physically, you can now do online across the entire spectrum with the bank. So we've used that time to increase our distribution. We are still growing along the same parameters. And to put your mind at rest, अच्छे दिन देश के लिए भी आएंगे तो हमारे भी अच्छे दिन और अच्छे दिन वापस आएंगे.
Just to touch a little more on that, what I hear you say is that, you know, in the past you've told me that you could have grown even faster in terms of profits had you not been simultaneously investing in your branch network, which you've been doing. This whole rural strategy is something you've talked about for the last few years when we've chatted, and it seems to be playing out for you. What I hear you say is that once the economy bounces back within this 12 to 18 months, you as a bank too will get back to those numbers that you had come to be known to deliver for over a decade. Is that a correct way of looking at it?
We may reach those numbers, we may be above, we may be below, I'm not committing, but your general trajectory is right. You know, according to the laws of motion, that's where we are going. The numbers are your calculations. Mine is 3.2 into GDP plus 4 to 6%.
Yes.
GDP goes to say, let's say 7.5, multiplied that by 3.2, that's 22, 23, 24%, add 6%. GDP goes 7, you'll come to maybe 24%. GDP goes 6.5, you'll come to 23%. This is elementary, simple high school maths.
Do you believe, therefore, somewhere that this simple elementary maths of yours is something the market is not able to figure out, because suddenly from being a darling of the stock market, there is this whole feeling that, you know, you've slowed down?
No, I don't think so. Have you looked at our ADR? Our ADR is quoting at a 21% premium to the local price. And so the market is really rewarding us. Unfortunately, the foreigners cannot buy us in India. So the day our FIPB issues are resolved, we will get to our right price. But there's a 21% premium on the on the ADR, which I've never heard of for most stocks, definitely not for us. So I think we're a little more than the darling, except we're an unavailable darling currently.
Let me ask you a question which I'm sure you've been asked many times since the budget happened. There were those norms that were introduced by the government and by the RBI, and ever since then there's been talk about you know, the prospects of a merger between HDFC Bank and HDFC. I know so far you've merely said that there has been no such decision taken, but considering the fact that this seems like, and I'm only quoting Mr. Puri, all the analysts' reports that have come out, you know, global analysts are all talking about the merits of doing this. Do you believe there is merit in this merger?
So let me quote a different set of people. If you heard Mr. Parekh and if you heard Mr. Suktankar, and now you can hear Mr. Puri, and we've been saying this for 20 years. A merger between HDFC and HDFC Bank would make sense provided the business increases. 1 + 1 must be more than 2. There are some regulatory issues. Some of it have been sorted out, some of which we are under discussions with. As and when it makes sense, we will look at it. At this point of time, some have been sorted out, some haven't, so there's nothing on the table.
That's an important point you're making. You're saying that there are still certain regulatory issues which do not facilitate a 1 + 1 being more than 2.
Yeah.
Okay. When we last spoke, Mr. Puri, you told me that an informal process has already begun, because again, and I'm asking you this question because this is the big question on everyone's mind, what after you as far as the bank is concerned? And you told me that an informal process had started. This was a year ago. Where are we on that?
We are exactly where we were a year back, the informal. No, what I told you, maybe let me repeat it again, because otherwise, you know, people interpret it differently. Firstly, I was at this conference this morning, and they said there's an RBI regulation. There is no RBI regulation on the age of the managing director. There is a recommendation from a committee, and I'm also not aware of any statistical study or medical study that says that bank chiefs get older or senile faster than the rest of the world, who should get senile at 70. So that's one part of the question.
Are you saying you're staying on?
The second part is what I told. I'm saying at this point of time, I don't know what all the speculation about going on is. I don't think, I'm not quite sure this is the subject of regulation, and I don't think there should be a difference between if you're an MD of a company and an MD of a bank. But then the regulator is supreme, so I'm not questioning that, but I'm entitled to my opinion. And this should largely be a shareholder and board decision, subject to the laws of the country, which are 70 at this point of time. That said, I repeat what I said last year. I don't think I'm indispensable to this organization. I think there's enough depth in the organization. I think replacements are available internally as well as externally, but I also think I'm reasonably competent, fit, and proper.
When we last spoke, you said post 65, you'll be sitting on your yacht, sipping wine, and you will watch from there HDFC Bank continuing to grow. Is that going to be delayed by 5 years more?
Could be, because I haven't bought the yacht yet. So the wine I can enjoy. Let's put it this way, it's not an imperative. We'll cross the bridge. There are multiple options. Let's see how it develops. Nothing is a certainty. But we are well provided. Either way, HDFC Bank will grow and prosper.
It's been a pleasure, like always, talking to you, Mr. Puri. Thank you very much, and I wish you all the very best. Thank you.
Thanks, Vivek.